Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is January 26, 2012 and we are currently looking at price action on our 15-minute chart. And as you can see, for the past 2 days we've been in this risk on rally due to news coming out of the FOMC meeting on yesterday about them agreeing to keep the interest rate to near zero until the end of 2014. So this news from yesterday really surprised the market and resulted in this risk on rally, this bullish momentum, because what this news says is that the Fed is going to maintain a more accommodative stance with their monetary policy. And this may leave the door open for possible QE or quantitative easing in the future. So you can see that the market priced in this expectation of further liquidity, and you can see this bullish run or this bull rally in the pair. And this actually happened across multiple asset classes. We saw a rise in equities. We saw a rise in commodities like gold and oil, and also even some of our commodity-based currencies or our higher yielding currencies like the Aussie dollar and the New Zealand dollar. So then, of course, the tone and the sentiment for the past 2 days was risk on and was bullish. So then this is the price action for the past 2 days. We saw this 252 pip rally from the low here around 29.30 up to the highs here, up to this resistance around 31.84. So there's a 252 pip rally in the pair for the past 2 days. But that's the price action for the past 2 days. But let me narrow down to my 5-minute chart and show you what happened today with price action. Now, if I move my chart back and we look at the opening of our Asian session, you can see that price was pretty well supported above the 3100 psychological level. You can see that price couldn't break too far low below this zone of psychological support, but it was consolidating within a tight range at this level. And if you were in front of your monitor, or if you were on your computer around the opening, the European Open, you could have actually entered long at this support around the 3100 support, and you could have placed your stop loss on the other side of the support around the 3090 area. And what you could have done, you could have waited for bullish confirmation and you could have entered around 3112 and placed your trade and actually held on to the trade and took your profit near this resistance at 3174 for about a 60 pip trade. Now, that was the first entry if you were, up at the opening of the European session. Now, if you were looking for another opportunity to re-enter, let's say you missed this opportunity to enter in. If you were looking for another opportunity to get in and actually go long on the pair, you could have actually done it around 5:40 a.m. when price retraced from this resistance at 3174 and it began to slide lower. Now, if I was to draw in a Fibonacci retracement of this recent rise from the high here at 3174 down to the low here at 3098, you can see that this retracement off this resistance actually stopped and it found support at our 50% Fibonacci level. So you can see that price retraced from our resistance down to our 50% level, and you could have entered on a few locations around 540, or you could have waited and entered at 6:30 a.m. Central Standard Time. And if you would have placed a long here, or if you would have bought the pair upon bullish confirmation and entered around 3140, you could have held out onto the trade until it reached this resistance again at 3174 for about a 34 pip trade. So then there was actually another opportunity. If you missed that opportunity, you could have also re-entered on another retracement back to another fib level. And around 840, you can see that price retraced and found support at the 38.2% fib level of this rise here. So then this, the pair found support at this 38.2% level. And if you were in front of your computer, you could have waited for further bullish confirmation to enter long here and buy the pair and trade it up to this resistance at 3174. For about a 24 pip trade, or you could have been a little risky and held out onto your trade until it reached high around this 31.84 resistance for about a 34 pip trade. But right now, let me remove this Fibonacci drawing. Right now, I want to talk about this zone, this resistance zone between the 31.74 and the 31.84. There's this 10 pip zone that I want to identify. So let me go back to our 4-hour chart. So then if you take the high here from today, which was 31.84, and you glance to the left, you can see that on 2 occasions, on December 21st and on December 12th, this 10 pip range served as strong resistance and support, or prior resistance and support previously on our chart. You can see here on December 21st, it served as resistance, and you can see that there was strong selling pressure from that level. And also you can see the same happen around December 12th, where it reached this zone of resistance and there was strong selling pressure at this level. But this proves to us that this area of resistance around 31.84 could have also been a good opportunity to go short on the pair. So then let me go back to our 5-minute chart. So if you were in front of your monitor and if you was looking for an opportunity to go short, you could have done it at this resistance here at 31.84, and you could have closed your trade out once it reached this support at 31.36. And I want to draw in this horizontal line to prove that this 31.36 price had been prior support a few times throughout our trading day. You can see that price found support a few times, and you could have actually went short and closed out your trade here at the support, or you could have traded off this support and went long again. But there's something I want to point out to you, because for most of our day, especially after the European Open, you can see that price was trading within this range, and it couldn't break below this low at 31.36, and it had a hard time breaking above this resistance here at around the 31.80 zone. So then you can see that price was consolidating within this range for most of the day. But something interesting happened, because of course, as you can see, once it hit this resistance at 31.84, you can see that there was lower highs forming on our chart. Let me draw these lower highs in right here, which proves that the sentiment was changing for our pair. So then you can see this descending triangle forming. So then, of course, the sentiment was changing, and as you can see around noon, of course, we saw strong selling pressure kick into the market, and we saw price break below this support at 31.36, and it also broke through our 200 simple moving average line, and the selling pressure continued, and most of our gains for today was erased with this sell-off that happened in the afternoon. So then, of course, we didn't really gain too much. We're back to where we started at the beginning of the day, consolidating around the 3100 psychological level. So then, of course, you can see that the pair is pretty well supported above this psychological support, and I believe we're going to see further consolidation in the pair until the Asian Open. So then just be on the lookout for the breakout and trade the direction of the breakout during the Asian trading session. It can break higher and test these highs again, or it can break lower and trade lower. But that's pretty much all I have for you for the technical analysis review for today, and I will talk to you later. Okay then, have a good day.